Alright, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today we're going to be going over the S&P 500 and my prediction for one of the largest upruns in the history of the S&P 500, how I predicted it, the analysis that I used, as well as plenty of timestamps and past images to go along as well. For those of you that don't know, the S&P 500 is the top 505 stocks in the New York Stock Exchange. These are some of the largest companies, ones that you all have heard of. Walmart, Microsoft, Google, Amazon, the list goes on. You guys have heard of plenty of these companies. And this is one of the main investment vehicles as well for many people's investment portfolios. For those that are just getting started in investing, I always recommend this fund here, SPY, or of course VOO, which is probably one of the better ones from an expense ratio standpoint. All of those different ticker symbols and indexes all target these same exact companies. And it continues to grow and expand year over year, despite the drawdowns that we have periodically as well. So here what we're looking at is years and years worth of data. What we're going to be focusing on is this general last up run that occurred here. Now, I have past analysis. I unfortunately could not find the images for it, but I did have this run on liquidity. I had this major liquidity low here to this high. And from an investing standpoint, one of the simplest things I did, instead of trying to predict where in this range that price would come back down into, I honestly just set a limit order at the 50% from the range high to the range low and ended up just about sniping that perfectly. It was my way of kind of lessening my precision. However, it did end up being very, very precise regardless. So myself personally, I was able to capitalize on this entire roughly 62% up move that occurred here. One of the largest increases in my personal net worth ever since the beginning of my investing in business journey. 62% for those of you that are not avid investors or long-term investors. That is enormous returns to have in about a 2-year period. From the time of about October 2022 to currently, we're just heading into October fairly soon. I do invest a lot of capital in the market, so having a great entry with a lot of cash on hand during this recession, I was able to make a significant amount and as well as call out some more precise entries to my server and the people within our community. So one of the first images we're going to look at here is back in October 21st of 2023. And this was after, obviously, the recession occurred, and I focused on my typical concepts that I use to analyze charts. You guys have seen it in plenty of my other videos, but we have a sweep on liquidity here. We have a break of structure. I had a supply zone here that I expected price to retrace from, and then come down to roughly the 50% of the range and make a run for the all-time target high. I mentioned here wave 2 of economic downturn about to hit a hopeful recovery, and I mentioned I will personally DCA, which means dollar cost average, around that demand level, putting more into my long-term portfolio. So another thing I do not have images for, unfortunately, we'll take a look on this chart, right about at this level when this break of structure to the downside occurred. And it was about April, so actually fairly after it. So about this position here, once price officially kind of broke below this low, I did expect, and I did call this out to my community as well, a market recession. But I did see after this break of structure that I expected some form of market recession in the US stock exchange. And of course, we did end up getting one. And when that occurred, I was able to kind of maintain and save a lot more cash. So dollar cost averaging means based on the price of your index or the price of the S&P 500, saving capital until price gets lower and then investing in the markets again. And it helps average out the value of dollars per share that you have spent on that exchange. And in the long term, if you can bring down that dollar cost average, you will actually have greater returns in the long term. So that is something I did myself personally for about the whole year of 2022. And the second image that I have to show here is essentially just some basic analysis I sent in my server in August of 23, mentioning that I would love to see SPY take a dip and then run. Very clearly shown by this red line here, which represents a mitigation for me. I've talked about that in other videos and what that means to me, but I have this general red zone here. It shows that there is resting or remaining orders in here. So I did expect this to be a great place for a market retracement. And as you can see in future images, the market did retrace very effectively right into this mitigation area. And then of course to the all-time target highs and beyond at this point. And you can see that occurring in image 3 here. So I at all my traders in the server. I let them know, I replied to the original message back in August. And I basically said my SPY analysis, love to see SPY take a dip and run. And here you can see that red line I talked about where I expected price to come down into and then run. And here you can see very effectively right from that red zone that I have drawn, price ran right towards that red line, just mitigated that general area, and then made a very impulsive and quick run for the all-time highs. So taking a look at image 4 here, just to show you a little bit more of a precision entry as well. I did have this general monthly candle that I was focused on, and this is where I ended up investing a lot of my capital. But once again, at my traders, I mentioned the Fed rates for the second month in a row have been steadied, unemployment reaching yearly lows, and inflation has been steadied as well and under control. So we had a super bullish week, and I'm interested in seeing a recovery from this general monthly area, where you can see I expected a run to all-time highs, and then very quickly after got a fairly strong reaction and eventually ran those all-time highs much later down the line. This is just a close-up image of it so we can kind of get an idea of the analysis a little bit more. And then we're actually going to hop on a chart briefly so we can go over the specifics of it. So once again, I mentioned the expectation of a retracement here. And then as price got lower towards the 50% of the range, we see a great run on liquidity here, or a sweep on liquidity, followed by a break of structure of this very significant high in the markets. Once this occurred, this was my key sign that the markets are most likely shifting back bullish. And as you can see, very effectively, we ran significant all-time highs as well as beyond at this point. So my expectation once that high was broken was that we were going to make a retracement into an unmitigated demand zone, which rested here at this monthly candle, and then make a large-scale run for all-time highs. So I was able to effectively get into the markets roughly at this level. It was not at the peak of that monthly candle. I market ordered in on my brokerage and made about another 35% returns with a fantastic dollar cost average by saving my capital during these few months and then investing effectively at a much lower level like this, in combination with the already very great entry that I made at this all-time low here. But essentially, I'm showing this and the timestamps as well, so you guys can get an idea of how these concepts work on all different currencies, commodities, indexes, or whatever it may be that you trade. It works on all time frames. We're on a very macro scale here on the monthly time frame. And for those of you that do long-term invest, it can definitely help you get better positions for dollar cost averaging. If you guys are interested in more callouts or analysis like this, especially long-term ones, which I really enjoy doing, feel free to join our community. The link is going to be in the description. Or if you guys have specific questions about your trading or different markets, feel free to reach out. My Discord is jblaisdell729. You can just DM me, and usually I'm able to get to them fairly quickly, and I can help you out or answer any questions you have. Thank you guys for watching this video. I hope you all learned something from it. Reach out to me if you have any questions, and I will see you guys in the next video.